The gold that's been coming in, most of it, if not all of it, is coming in to the Comex. Some of it leaves. Some of it stays in the eligible category, but would be then refined bars, typically coming from London and Switzerland. But, if you look at the Venezuelan deal, it's gold doré that they're taking in that needs to be refined. Well, what if the U.S. refiners are too log jammed, and in an effort to throw people off the trail on all of this, you're seeing gold go out as an export, but it would show up the same way, whether it was fully refined gold going to China for payment or it was gold doré going to Switzerland for refining, would show up the same way. And the imports continue every single month. Let me see if I have the March numbers here real quick. I bet I do. And again, this is just 1 month, but what we're seeing is the same thing every single month. So as far as what has come in so far in the month of March, and it's not over yet, we have seen, there's silver, where is gold? Here we go. As far as gold is concerned, in the month of March, sorry, don't mean to throw you off here. Here we go. Comex gold deliveries. Total gold March deliveries so far, this would have been through yesterday, are up to 9,698 contracts, or 969,800 ounces have been delivered so far. And we saw 104,844 ounces shipped out. And I believe that was on Friday. Pretty sure about that. 104,844 ounces shipped out of Comex. Well, where's it going? Who's taking possession of 105,000 ounces? But we're seeing the same thing month over month over month. There's still half a month left, and we've seen almost 1 million ounces of silver delivered to Comex so far this year. So, or this month rather, for March. But this has been the same thing we've seen every month. So it's still coming in, but what is going out into who is debatable. And is it coincidence that this is happening same time that we've worked out these deals with Venezuela? I don't know. It just seems kind of that way to me. They're taking the U.S. to task. Like, you can't do this crap out in the open like this, because it's just ironic, I guess, that the circuit breakers didn't work when the price fell and got collapsed, just like the overheating on Thanksgiving night of the servers that have triple redundancy, and of the 1,000 commodities traded on Comex, it just happened to be the gold servers in the middle of the night for 11 hours because everyone's trading at midnight on Thanksgiving night. And when you put all of this together with the margin, the levered ETFs that was right in the period of rebalancing as well, some of these funds that needed to be rebalanced, and the increase in margin, put all of this together with the circuit breakers that were glitched. It's almost like they're saying, really, guys? Really? You can't do this stuff. That's kind of the way that I looked at it. The BIS is the most powerful bank on all of the deliveries or the repatriations from the Bank of England and the New York Fed. Lack of trust. Why are we seeing deliveries and lots of that metal leaving the exchanges, which would render it very illiquid? If you have truckloads of 1,000-ounce bars that have left Comex, you have a real hard time selling that stuff unless you don't trust who's holding it and the rules by which they're playing. It's a lack of trust to me. And it was very right in your face. Yeah, there were glitches, and yeah, we raised margins so high that everyone got strangled out, and yeah, we did it. What are you going to do about it? And at the same time, you're seeing wicked deliveries with all of these. So that's the important part to remember, is that in times of stress, price is not where the stress shows up first. It shows up in deliveries, like the deliveries we're seeing to Shanghai. There's stress there. In a normal market, that arbitrage would have ended a long time ago, because the big traders would have bought here, sold in Hong Kong, which is a Comex contract, exchange for physical, and have it driven over by truck to the exchange in Shanghai. That arbitrage would have been done in days, but it's now going on weeks and months. Why? Because they're choking on dollars. They're willing to pay a much higher price for it. Please give it to us. A $13 charge right now, it's about 13%. So that's somewhere in the neighborhood of about $13-14. At the same time, there's the VAT tax that they are responsible for paying when it leaves the Shanghai market. They're willing to pay about a 25% premium, but to the trader who has the ability to buy here and sell there, you sell 10 million ounces at a $13 profit, you just made $130 million. Have a nice day. So that arbitrage is real. I just think that what you are seeing is the West's desperate attempt to suppress the real value of silver, which, by the way, the European Union classified critical mineral a year and a half ago. China in November said, we're the largest producer, second largest producer of silver in the world. Everything that we produce, we're keeping at home for domestic use. We're going to mitigate supply or exports, they said in January, as coming back to kind of retaliate against the United States calling it critical. You got the whole world is looking at silver as something very important, and the price is set in one place, New York. And if you're going to screw with the price in New York, you're going to get called out maybe now when it's a different game than it was before. This is, this recognition by much of the world that silver was more important than the dollar price that it is supposed to be valued at. I think if I had to guess, that's why they said it in the manner that they did. It's unusual. I felt the same way when I read it. Well, isn't the BIS a Western institution? It is, but it's not just the United States. All of Europe classified silver critical, and so did, in essence, China, more or less. And so when you have the world that is accumulating something and the price is set in your backyard and you control it, well, you're supposed to play by the same set of rules. And if you have the ability to mess with the rules like that, I think it aggravates the powers that be. And in doing so, they blew up the refining industry in this country. Maybe that has something to do with exports going to Switzerland. And my belief, it's just a belief, that it's not going to China to buy rare earths, it's going to Switzerland to be refined because we can't do it fast enough. Would be my guess. Not sure. And it would leave too much of a footprint here. Have you ever heard in the mainstream the word margin at all in all of this? That is what really was the catalyst. You keep raising margins, you squeeze everybody out. And, did you hear any of this stuff? No, all we heard is that silver was overbought. And it was 1980 and 2011 all over again. We didn't hear anything objective. We haven't heard anything even remotely objective coming out of the media as it pertains to precious metals. They haven't talked about all the deliveries, not even once. So I think the BIS is regurgitating some of that, yes. But if you are, see, the thing is, what differentiates you, and the way I read it, is that we've been talking about all this stuff. Joe and Jane Sixpack reading that they'd miss that totally. They wouldn't get that. But if you are aware of what's going on, anyone who's aware of the shenanigans we've seen on Comex forever, you might say, because immediately when I read it, I'm like, yeah, they're taking them to the woodshed right here and saying, you got to knock that crap off. They're doing it in a manner that would kind of fly under the radar by most people. March 3rd to March 10th was the largest liquidation ever, record liquidation by institutions of S&P futures. The number was 36.2 billion per the Commitment of Traders report that they dumped in S&P futures. At the same time, we're having this issue with private credit, and much of the private credit came about during the low interest rate era, where you couldn't make any money on fixed income. People did you really want to speculate in the stock market, or how about this great idea by this big sophisticated company? We have this really sophisticated lending, and it's outside the banking system, and this is all during the cheap money era, and there were great returns, and everyone was turned on by it. But I think we now are beginning to see the fragility in a system that, was sold with quarterly redemption ability. But when companies like Blackstone and BlackRock start to limit redemptions, it's not nothing, right? It isn't. Now, granted, this stuff is within their right to do so. It's in the prospectus. But most of these companies would never go that far. I mean, in normal times, they wouldn't ever call that 5% gating into play. And when you see that signal, to me, it tells you that liquidity is not where the investors thought it was. That's a big thing. And, the irony, as you bring out, is that even though it's called private credit, the banks are really exposed to this. And people don't talk enough about that, as you allude to, because many of these banks like JP and Goldman and Morgan, and they'll lend the funds against their portfolio to make the loans. So if this starts to unravel, does it stay neatly contained? That's a question that I don't think we know. But I think that, and really no one has any idea how this situation will resolve. But I don't know. It's clear that I think it's going to ignite another potential wave of inflation. I think it's going to make people start to say, look, when people say, how much money can I make? No, they say, how do I get my money back? When people start moving from how much does it yield to how do I get my money back, we have a problem. And it starts up at the margin like that. These are the most sophisticated